Okay, so very good morning, my dear future child accountants. First of all, I hope my voice is audible and the PPT is visible. Can you please confirm? You can either use the chat option or you can use the voice. I'll be able to hear it. Yes, good morning. Thank you. Okay, so this is CA Chinmay Hegde, who is going to be your learning partner, I would say, for the next 1 month or so, or till we finish our sessions on strategic financial management, paper 2 of our CA final. So first of all, let me tell you, this should not be a normal teaching or a coaching kind of thing, or I will just say it's more of a journey. This may be a beginning is what I would like to say. I'll try my level best to make it interesting, fun, and easy, but it is your job to make it more interactive. So let me make it very clear from the beginning itself. If you want to get more, you have to get it. In the sense, you have to make the initiative. You have to ask the question, make it interactive. Or else, if you just leave it to me on a one-way traffic, I will do. I'll have to complete my syllabus. But otherwise, if you can ask more questions, I will be more than happy. So before we talk anything else, it's important we need to have some sort of inspiration or some sort of people to look up to in our subject. As far as financial management is concerned, I would recommend two icons. One, universal, that is Warren Buffett on your right hand side of the screen, and our own Rakesh Junjunwala, that is from India. And we should be even more proud because he is a chartered accountant. One interesting fact about Sir Rakesh Junjunwala is he did CA as a backup for his stock market interest. Many people, while doing CA, we need a backup like BCom. But he wanted to be in stock market, but in case he fails, he wanted a backup, so he did CA chart accountants. Many more fun facts we'll try to understand as we go further. So if whenever you have time, I'm sure you are article students, one of the most busiest species in the world. You will have very little time, but whenever you have, or try to make some time, anyway, mobile you will be carrying with you always. Use the internet to read about these people. Lot of quotations, lot of lessons can be learned. Wherever possible, I'll try to also do a fill-in. But you can put the effort to know about these people and their strategy and psychology yourself. So today, our initial session, I'll just talk about the basics, introduction. I shared the material. I hope you have got it. So initially, let me talk a little bit about me and you, then the resource content, what approach we are going to have, and the chapter coverage. A little bit about myself. Now you can see 13,339. These are the ranks that I have got in my foundation and my intermediate and my final level. And of course, I have cleared in the first attempt all the three exams. I usually used to tell these things on my last session. Then people have told me this. Sir, had you told me this at the beginning or from the beginning, you would have taken your words more seriously. Now that you're telling me at the end, we can't go back. So from that point onwards, I made a point that I'll be telling these things at the beginning itself. So this is just to tell you that the method we follow the process we follow are tried, tested, and verified. And after that, I cleared the exam final in 2010. And after that, I joined a equity research firm, worked there about few years, started teaching parallelly. Now I'm into full-time teaching as well as trading. So I do only two things a day, that is classes and trading, stock market trading. So I don't have any consultancy firm, and I don't have any uh, practice as such. That's about myself. Beyond that, let's not worry about it. Uh, about yourself, or anyway, I'll just quickly tell one more point. I would have told you earlier. Some of you might know it, but still, I'll quickly tell you why teaching field. Because like you, some people, whenever they look at me, whenever they meet me, they will have their question on their face. That is, after clearing the exams with such a good academic background, I would say, and having worked in a corporate field in an eco research firm, why teaching? To put it into simple words, there are many professions who pay you for getting scolded. For example, what is employment? It's a process of getting paid for scolding from your boss or manager. What is practice? It is also a process of getting scolded from two sets of people. One, that is government departments like GST, income tax, who don't understand how the business work, and getting scolded from your clients who don't understand how the government department works. In between, you people or we people, CAs are sandwiches. So is there a profession where you can scold somebody and still happy about it, or you get paid for it? I think teaching is the only profession you can scold somebody and get paid for it. Anyway, so keeping the lighter side aside, the only reason why I selected teaching is because I can learn continuously. Because I'm a person, unless it is pushed into, somehow I don't do it. That is, it has to be compulsory for me. So if it is in teaching field, I have to learn. So that way it keeps me updated and I can learn new things continuously. That is the only reason. The best way to learn is teach, and the best ways to teach is keep learning. That's the reason I have selected this and nothing else. Your life, just to look at your own life, looking backwards at your CA career, couple of whatever number of years you had. How was your life when you just joined CA, and over a period of time, how your life changed? The picture says it all. This is one thing I would like to discuss first before I go further. What is the passing mark of CA? That is, if you score this much, you have passed the subjects. For example, we'll take SFM itself. Can you tell me, if you score me this, I have passed, and if I score below this, I have failed? I need, we want to have what is that cutoff number where beyond which we say it is pass, and below this we say it is fail. And what is this cutoff number? What do you think? Any idea how much is your passing mark? I'm not asking any technical questions. So some people are telling 40. One second. Okay. So one number is, beyond that it should be pass, below that it should be fail. So some people are telling 40 marks. Let's analyze, is it 40 marks? So if you score more than 40, let's say 41. Okay, so let's say 41. Can you confidently tell, if you score 41, that you have passed the exam? Next exam you need not write? Not necessarily, right? What if you score 39? Yes, 39 is definitely a fail. Oh, so which is the number which will confidently tell you you have passed? And that marks is 60, right? More than 60, definitely you can tell you have passed. But 59, does it fail? No. So it's such a beautiful situation where passing mark is different, failure mark is different. Or I will say your passing mark range is between 41 to 60. Below 41, definitely, or below 40, you are a failure. Above 60, definitely you are a pass. But between 40 to 60, you may pass or November pass, I think. Means you may pass, you may not fail. It depends on your marks in other subjects. Or can I say like this? A person who scored 45 can pass, a person who scored 55 can fail. Is that possible? A person who scored 45 pass, but 55 can fail. Yes, it is definitely possible. And it is a very frequent phenomenon, and you know the reason. It is because of aggregates. Understand it other way around. In CA, passing a subject is different from passing a group, is different from passing the exams. If you pass all 8 subjects, does not mean you have passed the exams. Many people don't understand the difference, and you learned in a painful manner with the help of shortage in examination aggregate marks. That is 40 into 8. You know it should be 320, but institute expects 400. This is one very important point. You have to start practicing it. It will not happen just like that. If you see what is the gap, 40 into 8, you should get 320, but from 320 to 400, you have a shortage of 80 marks. In equivalent units method, 80 marks means 2 equivalent subjects. So you don't have 8 subjects, you have to make it as 10 subjects. Or if it is percentage terms, 80 by 320, 1 by 4, 25%. Extra marks you have to get. Anyway, how should we approach this? What is the reason institute has put in the criteria like this? That is because you have to specialize in some subjects. Either FR or SFM or tax or law, audit, whichever subject is your favorite subject that you think you understand better or you want to learn better, that one subject or two subject specialize so that you can get 70 plus 80 plus in one or two subject. Overall you can get the average. So if I want aggregate 50%, don't aim 50% in each subject. On an average is okay, but you can't reach that average like that. Some number will be high, some number will be less. Let me give my own example. In the intermediate, I told you I got third rank. Remember, all India third rank. In accounts, I had got 89. In audit, I got 46, I think. Almost half. 46, believe me or not. 6 or 7 marks less, I am also boundary, gone case. But how could I tell myself that I got ranked throughout all my life just because of my other subjects' marks? So it's more than managing the weakness. Here, you have to make sure your strength counts a lot. You have to capitalize on it. Anyway, so what is the purpose of me telling all these things? You have to pick your subject and specialize in it. For example, income tax, you want to uh, specialize. Whether you want to be in employment or practice, that's your choice. But you want to have more specialty or more expertise in income tax. Then your learning should not be limited to what is done in the class. Read each and every case laws possible. Read each and every section, rules. Go by the bare acts. That one subject, you have to make it your life. But you cannot specialize in all 8 subjects, okay? I know people will be very, very enthusiastic that too when you start the classes. Every subject you want to specialize. That's never happened. Never ever in the history of CA, any person scored all 90 plus. Never happened and will never happen also. Because it's humanly not possible. So don't even attempt it. Don't tell that I will score 90 plus in all 8 subjects. You can reserve yourself bed in mental hospital. It's not possible. Okay, so let's clear everything. What is the essence of this discussion? You have to pick your subject and go beyond the classes, make it your life, aim for 80 plus 90 plus in 1 or 2 subjects, which will help you score that aggregate marks. That is the takeaway from this discussion. In classes, definitely I can see a lot of people enjoying without any responsibility. Somehow in the examination, the role will get reversed. You get shocked after seeing question papers. In class, when somebody is solving, when everything is simple, smooth, straightforward, in examination, the way it is shown in the picture, what the hell is happening? Let me tell you, this is not going to be a easy journey. CA course, as you have seen so far, and you will be seeing further, it is not an easy journey. That too at your age, let me tell you, or at your position what you are in. You are in a position where you are capable of earning. If you join somewhere, I'm sure you get handsome salary. But you are leaving away all those opportunities and want to do CA. And some of you might be doing it parallelly. Along with doing the job, you might be doing it. So you are following through a very difficult path. Not everybody can manage, and CA is a person or CA is a course where you are by default multitasking. You have to manage clients, you have to manage office, you have to manage studies, classes, whatever. Whether you are doing articleship, beyond articleship, CA requires multitasking because that is how a professional should be once you clear the exams. So it is going to be a challenging course. I will say it's not an easy course, or it's not an easy course, but definitely it is a course which is worth it. So throughout you finish your CA, please make sure you remember these 3 sentences. It's hard, it's irritating, it's frustrating, it takes a lot from you, but remember these 3 sentences. Heated gold becomes ornament. For the ornament, you need to heat it. Then only it becomes that much valuable item. beaten copper is called as wire, compressed carbon is called as diamond, heated, beaten, and the compressed person is called as a chartered accountant. There is no exception, there is no exemption. Okay, so this is about myself and little bit about yourself. Resource content, what books you can follow, what videos you can follow, uh, where you can follow the social media and so on. Books, I have shared the material, you can go for it. I also have a kind of textbook available. If you want, you can buy in the market, you can search in the Google. Its name is Hegde's H, but I've shared the material with you. Let me tell you first of all the what material you have and what are its features. This material what I've shared with you has all the questions from institute publications from the year 2008, be it RTP, MTP, suggested answer, study material, old practice manual, everything has been compiled, available in both the books. And it is not a just copy paste, it is a logically ordered questions. In the practice manual, if you see old syllabus practice manual, it is just a compilation of questions. I have taken same questions, not something great, but I have arranged them in a logical order. For example, bond valuation first, then YTM. So I've just arranged in that sequence so that you can smoothly cover all the problems. And against every question, heading have given the source. May 2012, 8 marks. RTP, November 2020, like that. For against every question I've given, when you see the material, you'll be able to see it. And I've compiled the theory questions as well. Theory questions have been compiled and that material has it with solution, of course. And at the end of each chapter, for you to revise, we will also do, if time permits, summary charts in the form of flow charts, diagrams. And answer hints have been given. The final answer for you to verify. But what is not given is the detailed solution is part of my Hegde's H textbook, but not part of the class book what I've shared it with you. So in our classes, so many problems are there. Definitely, I will not be solving all the problems. Definitely not possible. I will be solving, I can say, minimum problems only. But I'll try to make sure all the varieties of the problem is solved, and I would like to spend more time on discussion on each and every problem, especially its practical relevance. So we should go back beyond just the solution. You have not received the material in the WhatsApp group. I've shared it yesterday. Please check the WhatsApp group. If you have not added, please request the management people. They will add you. And okay, you can ask me to share again. I'll again share in the WhatsApp. Okay. Yes. Good. So that will have all these features. Detailed solutions only will not be there. So if you want a detailed solution, you have to buy it separately. Okay. This will be the content on our books. Beyond this, should you buy any textbook? I really don't recommend anything. If you want to buy anything available in the market, just go and buy it. But from exam point of view, I would recommend this is more than sufficient. Whatever you can think of, it has been compiled till last recently released RTP. Also, I have updated. So everything is at your disposal. So whatever student can think of, he wants, I have given summary charts, theory questions, logically ordered question, a source for every question. I think beyond this, I could not think of anything. If anything else can be done, you can add. I mean, you can tell me. I'll try to incorporate that in the coming publications. Examination chart like this also given. You can quickly go through it. I don't want to spend time. This chart is available. This is one more thing. Against every chapter, I have put in the graph like this. How many marks each attempt this chapter has come from. And not only that, my dear friends, under each chapter, I have put in topic wise. For example, this is just to illustrate, this table will be there in your material. Check it out. For example, foreign exchange risk management. Theory has come for how many marks? In this topic, basic conversion with spread, cross rates, forward market terms, each topic wise have divided to get you understanding where the questions have been asked from. I've gone to that level of detail, and all these done by myself. So you can trust on these numbers. I have not used any assistant or somebody else to do it. This is done by myself personally, so that you can have more confidence and utility for this for examination purpose. Like this chapter wise also I've put in the charts updated till last exams. Okay, what is the approach we can follow in SFM, strategic financial management? So I would like to tell these things in my sessions. I will be using the PPT more. So I'll be having most of the solution there. I'll write it also. And as I requested earlier, it's your responsibility to make it more interactive. Ask as many questions as possible, as many questions for two reasons. One, when you ask questions, I will understand what is your level so that I can come to that level and take you from there. Second, when I teach on my own, if you make it one way, then I will be keep on speaking in my point of view. I might have missed few points I don't understand, because in a flow, right? We are not machines. In a flow, we might miss few important points. When you ask questions, we will get reminder, and also it will be helpful for others who might not be getting the question now. They might get it later. So ask as many questions as possible, and there's a difference between the live sessions and recorded sessions. The record session people will not have it, but the live sessions you can have it. So ask as many questions as possible. In between, I will also try to tell some jokes. So try to laugh at it. That is for good for your health. It will energize you. It will keep you alive. And at this your young age, you have to have some fun. At least you should express yourself. And if you don't laugh at this your age, I know your reaction. This is poor joke, PJ. This joke I saw yesterday only. This old joke. This also joke. For all these reactions, if you give and if you don't laugh at it at this age, if you want to know what will happen when you become old, you walk nearby some parks nearby your homes. What will the age-old people do? They will have some like laughing clubs, some ha 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 ha, and they'll be laughing. For no reason, they have to laugh. Why? Because those people did not laugh enough when they were in young age. So later, they are forced to do it. Anyway, so I'll try to tell jokes some in between, but I will not announce it. So if you feel it is somewhat funnier, don't worry about others. You express yourself. So I'll approach what I'm going to follow is I'll take you from the very basics. I'll try to explain as little as possible. That is why I request you, any doubts you have, get it clarified. Don't have any apprehensions like, no, in mathematics I'm not very strong, in x and y values I'm not very strong. So don't have anything. I'll try to start from the basics as much as possible, and I'll require your complete attention as well as get your doubts clarified. There's nothing called as basic doubts, silly doubts. If you don't ask your doubts, that becomes silly. So I'll try to make sure from the basics I'll start, and I'll take you things in a logical, conceptual manner. I'll try to incorporate as many practical examples as possible. That is the utility of this subject after all. And as I told you, I will not be solving all the problems. I'll try to make sure I cover as many problems in a different varieties as possible. Repetitions, I will avoid it. And adding cherry on the top, some shortcuts, standard technique for you to get the answer quickly. We will learn it later point in. So as I told you, please get your doubts clarified. That is my humble request. And when you ask more doubts, class also will become more interactive. Okay, this is all about the approach and what areas in FM we have, and what chapter we are going to learn. Let me quickly run through those things. Ah, one more thing. The class timings. What is the class timings as announced? Because I'm going to announce one small change in my classes. Uh, okay, 6:30, 9:30. One change. It will be 6:15 to 9:15. Anyway, it's online classes, so you don't have to come physically. I hope you don't have excuses like a traffic jam is there or bus is not available. So 6:15 to 9:15 for simple reason. Stock market starts at 9:15. I have to be there at 9:15. That is the reason. So let's make the sessions between 6:15 to 9:15. Of course, Sunday we can decide whatever the schedule timing we can follow. Other days 6:15 to 9:15. Okay. So coming to the areas in financial management, this one important point, please take it to your mind very strongly. This is a very important point, the foundation of this subject. The objective of financial management is decision making. It's all about future, it's about decision making. So every topic you learn, how I can make use of it. I learned standard deviation. Okay, what does it mean? How can I use it in real life? So if you don't know how to use it, that's mean you have not learned it. So everything we learn in this subject, after solving every problem, ask yourself, can I make use of it? See, for example, you had NPV, right? Net present value. If NPV more than 0, we will accept the project. NPV less than 0, we will reject the project. So decision making is the ultimate objective of our financial management. And when you want to make decisions, obviously we look at two things. How much is cost and what is the benefit? Is the benefit more or the cost more? And in financial management, because long term, we will have time value of money. I'll discuss going forward. And we'll use the concept of average because many data points can be there. To simplify, to summarize, we will use average. And once you get in a number, how do you interpret in a logical manner? Okay, what are the chapters we are going to have? Institute has 14 chapters, but my coverage will be different in a sequential manner. I will tell you that what sequence I follow. First, I will do basics. Institute also has basics. Then I will go for bond valuation, fixed income valuation. Institute has given it as security valuation, but I will cover it as bond valuation. After bond valuation, fixed income, I go for shares where the income is uncertain. So one, valuation of bonds, valuation of shares, then many shares put together, analysis of security, in which proportion I have to mix the share, that is called as portfolio management. Can I invest in those portfolio that becomes mutual fund? And in addition to that higher level, that is derivatives like futures options, then comes most people's favorite, foreign exchange. Then we have interest rate management, focusing only on interest rates or not on any other variables. And finally, we conclude mergers. Then we have other theory topics, risk management, securitization, startup finance. We will discuss at the end. So this is our chapter coverage from our syllabus. Uh, since we are using the technology, so for interaction purpose, I thought of why don't we make use of this for interaction purpose like audience poll. So what you can do, you can go to this app. You don't have to download the app. You can go to your mobile or internet. In Google Chrome only you can go. Just type in vivox.app. Don't download anything. Just type in the Google or Chrome. Vivox app. VEVUX.app, and you just type in this ID 166315592. You don't have to type in your name. You don't have to give any other your details, name, email ID, nothing. You don't have to do anything. Just go to Google Chrome, vivox.app, then it will ask for ID. Put this ID. This question is in front of you. You can choose your answer. Let's see how the reactions will be. Which is the primary subject to start a business? Company law, income tax law, GST law, accounts, financial management, cost management. I hope people are got it. This is what you should go for. Vivox.app. Just type in your Google Chrome and then type this ID, because this question will come in front of you. You can choose the option. Technology is there. Let's make it useful. Okay, let's see how the response will be. Anybody not got it? Okay, I'm closing it. Oh, 100% saying financial management. Amazing. Very happy also, because every other subject comes once you start a business. Once you start a business, or once you decide to start a business, everything will fall in place. You start a company, you go for a payment of income tax, you go for audit, you do accounts. But to decide whether a business should be done or not, the basics is financial management. As I told you, decision making. So if you learn this subject properly, not only you can use it in your work, job, you can even make your personal financial position better. You can make a better personal financial decisions. You can make a career in stock market, or if you don't make a career, it's okay, you do audit, but you can invest in stock market. You can learn financial aspect, you can learn financial planning, you can understand the time value of money, the power of compounding. So financial literacy at least will be better. Financial management should be learned. So, and also one more special feature, please observe this. All your subjects, accounts, governed by accounting standards, GST law, income tax act, company law, companies act. You understand? Each and every subject is governed by law, whereas financial management don't have any law. We are governed by principles, concepts. Time value of money is a concept. You can't put the rule there. What is time value of money? Define. No, I can't define it. We don't have a law governing financial management. These are all principles that you have to learn. And the beauty about the principles is it's based on concepts, not on accurate words. So in every problem, for example, when I say value, valuation, subjective, difference. So in this context, valuation of share is so much. In this context, valuation of share changes. Such a beautiful thing. Zomato is a loss-making company, but it's got listed recently. It's going well. People are purchasing. People are paying for it. It's a loss-making company. The fundamental primary objective of business is profit motive, and Zomato never made profits. Flipkart sold their business for billions, where they have never made profits. And company like Nika got listed recently. They may are making good profits. So you have to understand the valuation perspective. You might have seen the advertisements, Byju's everywhere. Some people say scam also. Anyway, but you see it's very popular. But Byju's never made profits. Subjective valuation. You have to understand from different context. What I'm trying to tell you is financial management is such a subject which is the foundation for all other subjects. And I, on a later note, used to say this. The most primary important law to start a business is not income tax law, company law, it is father-in-law, because you need source. Don't take it wrongly, only for conceptual purposes. Uh, I will give these things as the examples. Okay. Let's see this. Are you from mathematical background? You don't have to again go for this. You can just click next. This question will arrive in front of you. Okay, so let's see the response. Okay, 37.5% people are telling yes, 62.5% people are telling no. It's amazing. You have learned till 10th standard mathematics for sure. You had a subject. In 11th, 12th, in PUC, you may not have. Okay, that does not require. So just to tell you, make it very things clear. Just to make it clear, this mathematics what is required at CA final level is what is your 10th standard mathematics, nothing beyond it. I know you might tell I'm from direct entry scheme. I did not study mathematics. All those things are fine. I will start from the basics, but I request you to know the 10th standard mathematics, that basics at least. And some people have these apprehensions. Uh, Somehow, whenever this x value come, y value come, people don't have confidence. I call x phobia. This one question which always wondered me. I don't know whether it's wondered you. In mathematics, no, whenever I don't know something, we'll assume x. A missing value, assume x. Or we have to compute something, assume x. Why should you assume x only? See, first letter in the alphabet. What is first letter in the alphabet? A. A for apple. So I should assume A. Okay. I'm trying to find something. So I will take the last alphabet. Last alphabet is Z. Why X in between? Why should we assume X? Neither the first alphabet nor the last alphabet. I mean, I also don't know the answer. Maybe, maybe the person who invented mathematics, no, who invented mathematics so many hundreds of years back. So when a person invented mathematics, he had lot of X in his life, I think. So he made entire generation search for X, find X, till we are finding X, and we have not found out. And that's why people get afraid, I think. Because whenever we talk assume X, you remember your X and you will not like it. Anyway, mathematics, I'll try to start from as basics as possible. I'll not go to the advanced level directly, and wherever possible, I'll try to explain the derivation of the formulas in a simple words as possible. Okay, which of these topics you are comfortable with in the basics of finance? Let's see. Which one you select? You can select more than one also. Time value of money, probability, average, standard deviation, correlation, and regression. You can select more than one. This is not multiple choice. Okay, let's see the answer. Oh, time value of money, everybody's comfortable. Okay, that means I can go a little bit faster on that. Correlation regression, 0%. Okay, that's expected. Fine, good. You can answer the next one. Is risk essential? Is risk required? Or can we avoid risk? Can we go without risk? Quickly answer it so that I can get the quick interactions. Okay, 75% people are telling risk is essential. Interesting. Which of these instrument will have risk, or I'll say more risk? Bonds, debentures, equity shares, both of the above, none of the above. Which will have risk? I mean, not more risk, which will have risk. Okay. Most of people equity share, but answer is both of the above. Even bonds will have risk. Both of the above is the right answer. Anyway, I'll discuss as we go further. Which is a better form of investment, in one company share or in multiple company share? Okay, let's see the answer. Okay, everybody is telling in multiple company share. So you understand what we are doing, right? Each and every answer you are giving, we are leading to a different chapter in our syllabus. Risk essential or not, we have a chapter on risk. We talked about basics. Are you from mathematical background? Basic chapter, basics. Then bonds, equity share, that is one chapter. One share or multiple share, that is portfolio management, mutual fund. Are you understanding? All these questions I'm asking you, and your answer will be our different chapter. So we are leading to those chapters in a logical manner. So try to link. Okay, this is a long puzzle. Every day you have to connect the dots. Okay, once you start earning, will you give me the money to manage? Let's see what is your response. Once you start earning, will you give me personally, the money to manage? Okay, let's see what you tell answer. Okay, not sure is most of the answer. Very honest answer, but at least for this sake, you could have told, no, yes, at least I would have been happy by listening to your answers. Anyway, what I'm trying to tell you is when you give the money to somebody else to manage, that is called as mutual funds. What is essentially mutual funds? You give the money to the mutual fund, they will invest in the stock market, they manage the money on behalf of you. We have various other funds, venture capitalist fund, private equity fund, we have mutual funds, real estate investment trusts, REITs, infrastructure investment trust. We have PMS, portfolio management schemes, right? So when you give the money to somebody else, essentially that is what is mutual fund. Okay, this is getting slightly technical. Let's see what you are going to think of. Let me read the question, then you can answer. You wanted to buy a building and pay a token fee of 10,000 to the building owner. You paid 10,000. As on this date, the value of property is 20 lakh. So today, when you're making the payment, it is 20 lakh. After a month, due to some reason, the value of property came to 15 lakh in the market. Now, what would you do? Go with the purchase since you already paid the advance, or you say don't purchase since value of property has become down, has come down. It was 20 lakh, you paid 10,000. Now it is 15 lakh. It's still, but you have to buy 20 lakh only, okay? You have to buy 20 lakh only. So, will you buy 20 lakh for the simple reason you paid 10,000? I've already paid 10,000, so I have to buy the property. Or will you say 10,000, let it go waste? I don't want to buy from this fellow 20 lakh. I can buy somebody else at 15 lakh. I hope you got the question. You paid some token fee for agreement of 20 lakh, where value of property is 20 lakh, and later value of property came down to 15 lakh. Will you still buy at 20 lakh only, or will you give up 10,000, say I don't want the 10,000, I don't want the property, 10,000, let it go waste, no problem? Let's see what you tell the answer. Don't purchase and the property has come down. Very good, most of people are telling that as the answer. Very nice. This is what is called as derivative. We are going to call this as call option, an amount paid to get the right to purchase something. We are going to learn in detail in derivative chapter. Okay, try to answer this. You're an exporter of goods. Customer will pay you 1,000 USD after 3 months. Which is better? Uh, you wait till you receive 1,000 US dollar and later sell in the market, or today only you enter into a contract with a bank to sell the $1,000 at a fixed rate. You get 1,000 US dollar after 3 months. One option is there. Wait for 3 months. You get the US dollar, then make it into rupees. Option 2. Today only you sign a contract with the bank that let us agree on the rate. Let whatever be the market rate, let's not worry. Let's fix the rate now itself. Let's sign into an agreement. Let's sign a contract. Which is better option according to you? Okay. Uh, Most people are telling enter into thing, because what you're telling is at some rate at least we will know, right? It's called as hedging position, hedging situation. We'll discuss this in our foreign exchange chapter. Should I enter into a contract or should I wait? What other alternatives do I have? What other options I have? Hedging techniques, hedging strategies. We are going to learn foreign exchange chapter. Okay, try to answer this. You signed a contract which will starting in 6 months time. which requires 10 lakh. What would you do? Today itself you borrow 10 lakh, or borrow once the project starts because you require money after 6 months, not now, or today only you sign a contract that I'll borrow after 6 months. You're not borrowing today, you're not borrowing after 6 months, you're signing a contract, I'm going to borrow after 6 months. Which would be a better answer? Okay, let's see what you tell as the answer. Okay, most of the people are telling you are going to enter into a contract to borrow later. This is called as forward rate agreement, and this topic is interest rate management. How do you manage your borrowings? What are the various sources available? That is the chapter we are going to have, interest rate management. Okay, let's see if we can answer this one practical question. Vodafone and Idea were severely affected by competition from Reliance Jio. What step did they take to overcome this competition? Vodafone and Idea. So what they did? Merger, price wars, or they made some technological changes. Okay, I think this would be a straightforward one. Yes, merger, 100%. Vodafone Idea are same company now. That is what we are going to have a separate chapter on mergers. Okay. So what we are going to have, we will have the sessions, classes will be there. In the updated, if you want any additional videos or any resource contents like RTP, MTP problems solved, or post examination discussions, or some special problem discussions, I'm going to upload in my YouTube channel. I'll just share. I'm not sure why I did not do it in. Okay, I'll just tell you that. Where and all you can get the resource content. I should have told you earlier. For FR SFM, I'm a faculty for both. Now I'm doing only SFM for you. In YouTube, you have a 1 second. There's one thing called as Advait Learning FR SFM by Chinmay Hegde. This is a YouTube name channel where you will get SFM 1 day marathon, SFM theory marathon. In 1 day, I've covered from beginning to end all the chapter theories. About 8-9 hour session is there. You can listen to that. And now and then I'll update some special problems on SFM, some variety problems, some difficult problems, which I may not do in the class. I would have uploaded there. So use the YouTube channel. And how to approach exams. We will have some discussions continuously. How to face the exam, how to prepare yourself. So all those kind of general discussion, I keep doing this in YouTube channel. So please do join Advait Learning FRSFM by Chinmay Hegde. There you will have it. For YouTube stock markets, daily stock market, or I will upload. I may not do it daily, but I will do it frequently. I'll be uploading the stock market content. So for that YouTube stock market YouTube channel, Hegde's Hedge, you can join it. Telegram channel, for if you ask your doubts, you can subscribe at CA Chinmaya Hegde. Discussion forum will be there. You can press join. You can ask your doubts. You can post your questions, and either me or somebody else in the group also can answer it. Any doubt relating to FRSFM, you can use the Telegram to get your doubts, and for updates also. Any new things comes, I'll be keep posting in the Telegram channel. So make yourself comfortable with that. Okay. So these are the subjects that we are going to learn, we are going to discuss, and the basics I already gave it to you. If you had old syllabus and old study material, some chapters are not there. For example, you don't have an international financial center, you don't have Indian financial system, you don't have small and medium enterprises. These three topics have been removed. Many attempts back have been removed, but if some of you are having the study material, I'm just telling you, these three chapters are not there. Or if you're seeing previous year question papers a few years back, you might see question from these three chapters, they are not there. Remaining chapters, 14 chapters are there, and I'm going to do it in a logical sequence. I already told you. Question paper pattern, I don't think any old syllabus will be there. Let me talk about new syllabus people. Question 1 compulsory, which will be having 20 marks. It used to be 4 questions, 5 marks. Somehow they're not following it. They're following like 10 plus 4 marks also. They're following 10 plus 10 also. It's changing. And question 2 to 6, answer any 4. Each question will be 20 marks into 4, 80 marks. And so 2 to 6 means you will have 5 questions. You have to choose 4. Each question will be 20. And the 20 marks will be a combination of many things. It may be 10, 5, 5, 16, 4, 10, 10 like that. And importantly, remember, each question will have a sub question which is theory question. So earlier what you used to have, no, this last question, question 7 used to be theory. 4 into 4, 16 marks. And people used to leave that. Or people used to do that. Only theory question they used to do. Now you don't have that choice. Every question will have a sub question which is theory. So you can't ignore the theory portion. So question 1, 16 marks will be a full-fledged one, or 4 marks, and 4 marks will be a theory one. Or 10 marks a practical question, 6 marks practical question, and 4 marks theory question. So every question will have a theory marks. So in the examination, around 25 marks or 20-25 marks, you can expect theory questions. Around 20 to 25, I would say. 4 into 4, no, not 25, 20 to 25. Theory question you can expect. So this is the question paper pattern. But mostly, the pattern I have seen, mostly every question will be 8 plus 8 plus 4 marks. Mostly they will be like this, 8 plus 8 plus 4. 8 theory question, 8 theory question, so 8 practical, 4 theory question, 4 marks theory question. That's the typical pattern what I observed. So any questions, my dear friends? This is the format we are going to follow, structure we are going to follow, chapters we are going to cover. If you have any questions or if you have any say in this, you can ask. I'll wait for a couple of minutes. Uh, no questions? Any doubts you have so far? You can ask. Okay. Uh, I believe no questions. Clear? Very good. We have to start the chapter. Before that, let's take a quick break. Okay, let's take a quick break of 10 minutes and then we'll move to the first chapter. Take a break of 10 minutes, then we'll move to the first chapter. 10 minutes break. Okay, so let's move on. Okay, the first chapter, financial policy and corporate strategy. I will run through very quickly. Basic principles of financial management. Basic principles, I mean, are not given by anybody else. This is framed by me for our syllabus purpose. Okay, so keep that in mind. Decision making, nobody knows about the future, so we make decisions about the future based on historical average. Historical data, so we do the average. We use probability concept. And cost benefit analysis, as I told you. Okay, this is one you have to understand very clearly. Price versus value. When we use the word price, when we use the word value in our syllabus. As told by Warren Buffett, price is what you pay, value is what you receive. Very important factors, my dear friends. Pay utmost attention. One simple example I give you. What is the price of a calculator? 150 rupees. 1 second. Okay. So what is the price of a calculator if I ask? 150 rupees, 200 rupees. But what is the value of a calculator? Differs from situation to situation. In a SFM class, calculator is more valuable. In a auditing class, in a law class, you don't use calculator. Okay. Now imagine in SFM exam, in the examination, calculator is not functioning. What would be the value? Or in the class, calculator not functioning, what would be the value? In the class, if calculator is not functioning, you don't really bother, because anyway, faculty is going to write the answer. But in the exam, if the calculator not functioning, you will panic. And that's why I always say carry two calculator to exam hall. We don't know when the calculator can go wrong. Right? Even in accounts, you have heard so many values: realizable value, present value, fair value. You see, so many values you have. Basically, differs from situation to situation, person to person. It is subjective in nature. Whereas price determined by market force, supply demand. You would have learned in economics. You have supply curve, something like this, demand curve like this. The intersection point is price. In simple words, the bargaining, what you do, you go to a shop, right? You ask how much is vegetable. He tells 100 rupees. You tells no, 100 rupees not possible. You come to 90 rupees. He says no, 95 rupees. Buyer is demand, seller is supplier. In between, you try to arrive at some price, that is equilibrium price. So when you purely determine based on market force, that is price. But when you calculate based on the value you get, we are going to calculate share value, option value, future value. So when you calculate the values based on these computations, based on benefit you receive, that's called as value. But when nothing is given, when we don't have other information, we assume price is equal to value. Context, you have to understand differently. But terminology wise, try to understand. Price means what you pay, decided by market force. Value is the benefit you receive, subjective, differs from person to person. And the definition of value in financial management, we have only one, which is present value of future cash flows. And we have certain basic assumptions that you want to understand. One is called as zero position, or also called as own money as also as a cost, or in other words, opportunity cost. Simple example I'll give you. In a city like Mumbai, or let's say Bangalore, is it better or is it cheaper to live in own house or rented house? Which one will you cheap? Which one will you prefer? Own house or rented house? Purely from financial management angle, not from emotional angle. Which one is cheaper according to you? In a rented house or own house? Own house don't have loan, no EMI, no legal obligations, no encumbrances, nothing. Own house is cheaper or rented house is cheaper? Rented house is cheaper. Own house, you don't have any obligations. It is it is in your own name. I would say most people will say own house because you don't have to pay rent. But answer is both are same, because rented house has a cost, rent. Own house has a cost. When you live in your own house, you sacrifice the rental income. Had you given it to somebody else, you are sacrificing it. So you should always make the decision without worrying about the source. Own money also will have a cost. Borrowed money will have a cost. Own house will have a cost. Rented house also will have a cost. See, suppose you are having a house in MG Road, center, heart of the city. No point in living in that house. You will be called a stupid idiot if you live up that income, rental income opportunity. Give that place on rent. You live somewhere few kilometers nearby. You can earn rental income. Or if you are having a house outside the city limits, rental income opportunity is very less. Then the opportunity is not there. So own house will have a cost. Rented house also will have a cost. Rented house will have a cash outlay. Own house will have an opportunity cost. Similarly, when you're talking about source of funds, should I invest in this company share or not? We are not going to worry about where do you take the money from. We focus purely on that investment decision. If you take the money by borrowing, you have interest cost. If you are taking your own money and investing, you are having opportunity cost. See, for example, a simple example I give you, you are having 1 lakh. Okay, you are having 1 lakh. Now you are investing in equity shares, and that equity share is going to give you 2% profits. Now, will you tell me, is it a good thing to invest in a company which gives me 2% share, 2% growth, 2% capital appreciation? Are you satisfied with 2%? If 2% comes every year, will you remain invested in such stock? What do you think? Is it a good return? You're not making loss. You're making profit, but you're making 2%. You can think from Indian context. Is 2% from that investment profitable? I mean, is it worth it? Every year you get 2%. You're investing in company A, something like that, let's say Infosys, ITC, whatever it is, you get 2% every year return. Is it a good return to invest in the share which provides 2%? Not better, right? It's better to invest in fixed deposits because it will easily give you 5%, 6% with risk free, without anything. You can even invest in government bonds. Now it's open for public also. That is what I mean by opportunity cost. You can't say own money, I don't have any cost. A 2% profit I'm making. No, 2% profit you're making, but there was an opportunity to invest in 5%, still you're losing. That is what we mean by opportunity cost. So the summary point what I'm trying to tell you is this: when we make a decision, we don't worry about the source. Own money has the cost, borrowed money has a cost. So both source of funds will have a cost. We focus more on investment side. That is what is opportunity cost. These charts must be there in your material. I feel you don't have to take it down. Please confirm. Is it there in the material? It might be there a little bit later in the chart section. If you want, you can take a quick picture of it. That is also fine with me. You can copy it down later. Zero position, which we assume that every investor is same for us. For example, if they ask you compute share value, we don't ask what is your source. Are you taking the money on borrowing basis, or are you having your own money? That does not matter for us. For us, everybody is zero position. That means everybody is same. So irrespective of your source of finance, we are going to value our assets. So we don't worry about your source. We assume everybody is equal. Or you say you start with a zero position. So everybody has to start with zero position. If you bring in your own money, you have to pay interest cost. You have to bring your own money, or you have to bring borrowed money, you have to pay interest cost. If you bring your own money, you are having an opportunity cost. So we treat as if you have nothing. We start everything fresh. That's what is meant by Zero position. Okay. Hope people are fine. I'll go further. From the point of view of your study material, framework of fundamentals of business, as the name suggests, strategy, finance, management. Strategy is about finding out alternatives. Finance is where we are talking about everything valued in terms of money. Management, bridging the gap between surplus and deficiency. When you have, sometimes you have surplus money, sometimes you have deficiency money, that managing that cycle balance, that is management. This is one typical questions you will get. Okay, but I don't want to spend time on these things, my dear friends. On the theoretical aspects, I have discussed in detail in my SFM theory marathon. So please visit my YouTube channel. I shared it to you earlier. You can search my name in the YouTube, you will get it. SFM Theory Marathon, where I have discussed from the chapter 1 till chapter 14, every chapter, theory questions I have discussed. So you can go through it. I'll just focus on what is important, that is time value of money. I would like to spend time on that. Okay, just the basics part. I would like to spend time on time value of money. And this is a beautiful sentence to remember on time value of money. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays for it. So time value of money, rupee 1 today is different from rupee 1 tomorrow. So let me quickly make you understand these aspects. Okay, fine. Fine. So in financial management, we write like this. Like today, we will write it as year zero. Year zero means today. And the end of year one, first year end, I'll write as Y1. Like that, Y2, Y3, and so on. Okay, now, if I invest today 10,000, now bank will give me, let's say if you invest 10,000 invested today or deposited today, you deposit 10,000 today, and let's say you get bank will give you 10% first year and 12% second year. How much you get at the end of year 2? What do you think? Will I get in total 22% or will I get something little bit more than that? You got my question? 10% they will give you in the first year, 12% they'll give you in the second year. So can I say you get totally 22%? Is that correct? Totally you get 22%? It is no. It is not. What is the reason? We follow compounding effect. That is, on 10,000, I get 1,000 rupees. On 10,000, I get 1,000 rupees, which means at the end of the first year, I will get 11,000. On 11,000, 12% means how much do I get? You get 1320. Okay. So you get 1320. So what is the total actually I got? So 1000 plus 1320. So I've got 2320. So I have not got 22%. I've got 23.2% actually. So I've got little bit extra because of compounding effect. In other words, if I have to move from year 0 to year 1, I don't add. Please keep it in mind. I'll be using these words a lot. We will be following multiplicative model. So from year 0, if I want to move it to year 1, this is present value, this is future value, and how do I move it from present value to future value? I don't add. I multiply it by 1 plus R, 1 plus rate of interest. From this year 1 to year 2, and how do I move it? Again, I multiply it by 1 plus R. So when I want to go up by 1 year, I don't add. I will multiply it by 1 plus R, and that is why it is what is compounding, or we follow mathematically multiplicative model. Multiplicative model, that is each year we keep increasing. But we don't add, we keep multiplying. Or in general, future value is present value into 1 plus R to the power of n. But in financial management, specifically SFM, I'm interested more in present value rather than future value, because I have to make a decision today. If I invest in this project, I'll get the cash flow in future. If I invest in this share, I will get dividend. I get ITC. If I invest in ITC, after year 1, I get dividend. If I invest in power grid, after year 1, I get dividend. If I invest in Reliance, I don't get dividend, but my share value will increase. So I always look at what is my future value, and I want to know what is its value today. So I will require present value, and present value is a future value divided by 1 plus R power n. So if I have to write it reverse, that is, we have year 1, year 2, year 3, etc. But I want to take the value to today. I'm coming backwards. That's called as discounting. So when I want present value, from the future value to present value, we apply something called as discounting factor. I divide by 1 plus R power n. This 1 by 1 plus R to the power of n is called as discounting factor. So all the future value we have, let's say cash flow, future value. So all these future values what we have, cash flow. When I want to discount to present value, we will be using discounting factor. For first year, I will use discounting factor. For second year, I'll use second year discounting factor. So 1 by 1 plus R power n. And for third year, I'll be using third year discounting factor 1 by 1 plus R power n. And one more options also we have. If every year cash flow is same, I know, see what I'm doing, how I'm calculating present value, future value into discounting factor of year 1, future value into discounting factor of year 2, future value into discounting factor of year 3. That is to say, present value is future value multiplied by discounting factor of year n, nth year. If 3 cash flows are there, 3 present value I will compute. Okay. But what if every year cash flow is same, like I get 10,000 per annum? Amount 10,000 into first year discounting factor, 10,000 into second year discounting factor, 10,000 into third year discounting factor. Instead of doing one by one, we can do sum of this. The sum of discounting factor is called as annuity factor. Sum of discounting factor is called as annuity factor. So present value is future values or future cash flows multiplied by annuity factor. So what is the common between discounting factor and annuity factor? Both converts future value into present value. In both cases, you get present value. But what is the difference? When discounting factor is used, you will get one particular year cash flow. When annuity factor is used, you will get many years cash flow into today cash flow. You can write down this quickly. I hope you understand my handwriting. Then I'll take a small numerical to understand. Sum of discounting factor is called as annuity factor, and present value is future value into discounting factor, or present value is future value into annuity factor. The difference is this will have the discounting factor will convert one particular cash flow, which will do one by one, and annuity factor which will convert many cash flow into present value at one shot. But both ultimately does the same job of computing present value. Once completed, let me know. Done? Finished? Okay, very good. I'll take this part out. Hope you are done. Don't ask me to go back to previous slide and all. I'm erasing this slide. Okay. I'll just take a quick numerical example. Suppose, okay, if you invest 30,000, you get income or cash flow. Let's say 14,000. Let's say, yeah, 14,000, or I'll just make a small change. Let's say if you invest 20,000, you'll get 10,000 per annum for 3 years. And discounting rate, your expected rate, let's say 8%. Okay, I'll just make it as 25,000. Let's say you invest 25,000. You invest 25,000. You get cash flow per annum for 3 years 10,000. Rate is 8%. You require 8%. Is it worth it? That's the requirement of the problem. Which means uh, year 0, year 1, year 2, year 3. Year 1 you will get 10,000. You will get it, let's say plus. Year 2 you will get 10,000. Year 3 you will get 10,000. And year 0 you have to invest, that means minus 25,000. So what should you do for decision making purpose? We should bring this value to today. 10,000 value today. This 10,000 value today. And this 10,000 value today. So by bringing it to the present value, the total of that, I'll be able to get my benefit value. Present value of future cash flows. I cannot do simply 10 plus 10 plus 10 is 30,000. That is layman calculation. That is ignoring time value of money. And how do we calculate? You can calculate a discounting factor 1 by 1 plus r to the power of n. So 1 by r rate of interest, I told you 8%, required rate of return 8%. To the power of 1, to the power of 2, to the power of 3, and so on. Or we can write in a tabular format which looks neater. So let me write in a tabular format. Here I'll say cash flow, discounting factor, then present value, or I'll say DCF, present value, DCF, both are same. I'm sure you must be aware of these formats, but I'm just doing a quick recap so that I'm not suddenly starting from the final level. Quick recap kind of intermediate. So here 1, 2, 3. Cash flow every year get 10,000. Discounting factor at the rate of 8%. So how do you calculate? 1 by 1.08. 0.9259. Press equals to, you get second year 0.8573. Again press equals to 0.7938. Okay, then multiply, you get the present value. So 10,000 into 0.9259, you get 9259. 10,000 into 0.8573, 8573. 10,000 into 0.7938, 7938. In total, 25,770. So your value of inflow is 25,770. This is the value of inflow. Outflow 25,000. So you can see net benefit, NPV we can say positive, right? Minus invest, or this say I will say this is this is my benefit. Okay, so 25,000 is the cost and 25,770 is the benefit. So here you can see benefit is more than cost. Benefit is more than cost, therefore it is acceptable. Therefore it is acceptable. You can do actually much more faster. As I told you, I have done discounting factor 1 by 1. How you can do faster? Annuity factor you can add, but if you want to do directly in calculator, 1 by 1.08 equals 3 times you press, because 3 years were there, then you press GT. Will you get the sum directly, or if you don't have GT in calculator, you can buy a calculator which has GT. But of course, you can use m plus function also, equal to m plus you can use. So 1 by 1.08 equal to m plus equal to m plus equal to m plus. MRC will give you 2.5771. 2.5770. Same number you get 2.5770. Also you can see. Or you can add all the three also, you get the same number 2.5770. Okay, are you done? Yes, okay. Now, can you do me one small favor for me? I'm going to make one small change. Instead of 8%, if I make it as 12%, can you recalculate the present value and tell me what is the present value, what is the benefit I'll get? If I make it as 12% instead of 8%, if I make it as 12%. Okay, so if I make it quickly, year, cash flow, discounting factor, discounted cash flow. I will have year 1, 2, 3, cash flow 10,000, discounting factor at the rate of 12%. So how do I calculate 12%? Directly 1 by 1.12, 12% equals 3 times, and you can press GT. You get 2.4018, is it? 2.4018. Yes, 2.4018. That is 24,018. Okay. So here benefit is 24,018. Cost is 25,000. So benefit is less. Benefit is less than cost. It is not acceptable. Not acceptable. Okay. Let's do some observations now. So when the discounting rate was 8%, what is the value we had got? What is the present value we had got? 25,770. And when the rate is 12%, we have got 24,018. Okay. One thing did you observe now? 8% became 12%. The rate of interest increased. The required rate of return increased. So when the required rate of return increased, the present value reduces. So please write down, it's a very important relationship between discounting rate and present value. Please write that. I'll dictate. Please write it. Observation. Observation. When discounting rate increases, when discounting rate increases, when discounting rate increases, present value reduces. When the discounting rate increases, present value reduce. Present value reduce. Within brackets, inverse relationship. Inverse relationship. Inverse relationship. Okay, inverse relationship. Oh, mathematically, why does it happen? Because discounting rate formula is 1 by 1 plus r power n, right? That's a discounting rate formula. Rate of interest in denominator. If denominator increases, the value will reduce 1 by 2, 1 by 3, 1 by 4. Denominator increasing, the value will keep on reducing it. Okay. Now, if I ask you this, at 8%, if your discounting rate is 8%, I have accepted. When discounting at 12%, I have rejected. Now, can you tell me if discounting rate is 13%, what will I do? Will my decision be accept or will my decision be reject? It will be reject, right? Because at 12% will be rejected. If I want 13%, rate of interest even more, present 12 will reduce even further fall. Inverse relationship. So this will also be rejected. Or I can say like this, anything below 8%, I will accept. Above 12%, I will reject it. Between 8 and 12, suppose 9%, 10%, 11%, then we don't know the answer. Okay, I'll give one situation. You try to tell me the answer. Okay, you go to a shop. You go to a shop. You ask, what is this cloth, shirt, let's say. The person will tell, this is 500 rupees shirt. Then you tell, what is this shirt cost? He will tell 1500. Then you tell, what is this shirt cost? He will tell 2500. You keep on asking like this, how much is this? How much is this? How much is this? If you keep on asking like this, what will the shopkeeper tell you? You tell me. What would he tell? What would be his reaction? Of course, he feel like slapping you, but he can't do it. You keep on asking, what is this price? What is this price? What the shopkeeper will tell you or will ask you. Huh. What is your range, right? Obviously, what is your range? What is your cost? How much is your budget? Exactly, that is the point. Same way, here I am telling 8%, I get so much of present value. I get a 12%, I get so much of present value. Instead of beating around the bush like this, why can't we say how much percentage you giving me? Directly we can go for it. That is, instead of telling percent NPV, then accept the project or not, let's calculate the percentage. Let's calculate the percentage at which the present value will become exactly 25,000. That is what this project gives me. You like that, invest. You don't like it, you don't invest. Straight away we can go for that percentage, cutoff point, indifference point, called as IRR, internal rate of return. How do we calculate? We follow interpolation. Interpolation means interpolate. Between two numbers, we are trying to calculate. Interpolation. Between two numbers. You see, 8 to 12%. What is the gap? 8 becoming 12. That is 4. And 25,770 to 24,080. What is the gap? 25,770 minus 24,018. 1,752. But I don't want 1752. I want 25,770 to come to 25,000 only. So it is 770. I'll write it here separately. For 4%, it is 1752. I just want 770. What is the percentage? You can cross multiply 770 into 4 divided by 1752. 1.757, 1.76, let's say. 1.76. So from 8%, extra 1.76. So 8 plus 1.76, you get 9.76. So interpolation, IRR is what we say, internal rate of return or cutoff rate. 8% plus 1.76, you get 9.76. So instead of asking at this percentage what will happen, at this percentage what will happen, this project is giving me 8.76%. If you think you like this, invest. You expect 8%. This project is giving you 9.76, giving you more than what you expect, invest. If you expect 12%, you're expecting more, this project not acceptable. So ultimately, if the question is what this project gives, rather than your expectation, rather than thinking from investor point of view, think from instrument point of view. That is IRR. 9.76. You expect more than this, don't come here. You expect less than this, you can invest because this project is giving you so much. This is like this. Company is telling you, we are giving salary of 50,000. You expect 50,000 or less, it's good for you. You expect more, don't come to us, go somewhere else. This is what we are offering from company perspective, from instrument perspective, from project point of view. That is what is IRR. So that is how we can make decisions. We can make decision based on NPV method like cost benefit, or we can make decision based on the percentage method, the IRR method. You can also use the formula difference in percentage by difference in present value. Okay, let me give you that also if you want. IRR formula also, just write it down. IRR, just write it here. Using formula also you can get IRR equals whatever the lower percentage plus difference in percentage divided by difference in present value multiplied by present value at lower percentage. Lower percentage is 8%. Difference in present value, it is 12 minus 8 divided by difference in present value 25,770 minus 24,080 multiplied by present value at lower percentage. Sorry, minus investment, sorry, minus cost, minus investment I should. Minus investment. So present value is your 25,770 minus investment 25,000. Same thing I get 8 plus this is 4 divided by 1752 into 770. 8 plus 1.76, you get 9.76. You can use the formula also. In the bond valuation, it's called as YTM, yield to maturity, which we are going to discuss when bond valuation comes. So we have understood what is discounting factor, what is annuity factor, And how do we calculate IRR? Okay, done? Any doubts? Okay, shall we go further? Okay, let's move on. Hope this is done. Okay, one more concept is there. Let me quickly cover that. That is called as compounding more than once a year. Compounding more than once a year. Okay, suppose if we take 10%, you start with year 0 with hundreds. 10% if I add, at year 1, it becomes 110. On that, if I add 10%, that is, it becomes 11. That is, so at the end of year 2, it becomes 121. This is yearly compounding. If I do half yearly compounding, I compound 6 months once. Let's say half yearly compounding, less than a year. Half yearly compounding. So what I start with year 0, 100. I don't wait till year 1 to compound. I do it halfway only. Let's say half, 0.5 year. So on 100 rupees, 10% for half year. That means I get 5 rupees. And second half, how I'm going to calculate now in the first year end. How much it will become? I don't calculate on 100 rupees. I will calculate on 105 rupees. On 105 into 10% into 6 by 12. I get 5.25, I think. So 105 plus 5.25, I get 110.25. You see, previously we had got 110. Now I'll get 110.25. This is called as compounding done more than once a year. And effectively, how much I got? 10.25%, right? Which means 10% per annum compounded half yearly will become equal to 10.25% per annum. Right? We got 110.25 means 10.25. So we got 10.25% effectively compounded yearly. So this 10% actually called as nominal rates. And this 10.25% is called as effective rate. So when you compound half yearly, you get more. If you compound quarterly, you get even more. If it is compounded monthly, if it is even more higher. So this is called as compounding done more than once a year. In fact, when you put the fixed deposit, most of the banks will give you interest compounding half year or quarterly ones. Most of the FD interest compounding quarterly. Anyway, in the exam nothing is given. We'll take compound yearly, but just be aware of it. Compounded half yearly, we can convert it to compound yearly. That's how we have two words: nominal rate versus effective rate. Please write down and let me know if you have any doubts. I'll give a set of formulas for compounding done more than once a year. Okay, nobody's done. Okay, nobody's done. I'll take it out. So let's talk about different situations here. Okay, so let's have the various frequency and then the direct future formula, future value. If it is compounding done half yearly once, you know what the formula directly we can do without worrying about the effective rate. Future value we do present value into 1 plus r divided by 2 to the power of n multiplied by 2. Why 10% per annum? Half year I can say 5%, 10% by 2. Similarly, if it is 5 years, how many half years? 5 years, full year. Half year means 10 half years. So rate of interest I divide by 2, n I multiplied by 2. To keep it very simple, r I divide by 2, n I multiplied by 2. So whatever is the frequency, I divide for rate of interest, I multiply for number of years. That is half yearly compounding. If it is quarterly compounding, quarterly, then what will be that thing? Can you tell me what will I divide by? 4 quarters. Don't tell me one full. 4 quarters is one full year. Quarter means somebody thinks differently. Uh, so what do I divide by? What is the frequency? 1 year means there will be 4 quarters. So divide by 4 and multiplied by 4. If it is monthly, I divide by 12 to the power of 12. Divide if it is daily, divide by 365 to the power of 365. Imagine if it is every hourly, secondly, every small unit. and I have next maximum continuously. Half yearly, I divide by 2. Quarterly, I divide by 4. Monthly, I divide by 12. Observe the numbers 2, 4, 12. I keep on increasing the numbers. If it is continuously, means what should I divide by? Can you think of the maximum mathematical number? I divide by 2. I divide by 4. I keep on increasing the numbers. 2 times I divide by 2. Half yearly means 2 times. Quarterly means 4 times. So I divide by 4. Continuously means how many times? I mean, so many times, but how many times? In mathematics, we call that as infinity. We call that as infinity. So, future value is present value into 1 plus or divide by infinity to the power of n multiplied by infinity. This is what infinity symbol means. But infinity, how do we calculate? We don't have it. So we have simplified using mathematical concept. What concept? Don't worry. Where the value formula is given by e to the power of r into n or r to the power of t. Where e represents, remember, 1 plus e. What is 1 plus e? 1 plus I. 1 rupee investment plus I rate of interest together. That is e. And E value, how do we calculate? I'll tell you. In the exam, E value they will give you, but E is called as Euler's constant, that is approximately given by 2.7138. You can take it approximately E value 2.7138. Yes, it's a constant. Yes, it's a constant. It's like a pi. 22 by 7 you have, no? Like that. It's a constant number. So 2.718, so not 3. This, okay, how to calculate this value? I'll tell you now. This e value is a constant number, so you can substitute and to the power of rn you can calculate. I'll tell you how to calculate in the calculator. Usually they'll give in the exam, so that will be easy for you. As one more method where you can do e to the power of something you want to calculate. Suppose e to the power of x you have to calculate. You can do like this: 1 plus, or let's say e to the power of, or if I do just 1 second. Okay, so e to the power of x or 1 whatever plus x plus x square by 2 factorial, that is 2 plus x cube by 6. You can also use this formula to calculate. It's basically x factorial by 0 factorial, x power 1 by 1 factorial, x power 2 by 2 factorial, x power 3 by 3 factorial, and so on. Anyway, you can take down this. I'll show you a number, numerical ones, how to calculate. Okay, is done. Okay, I'll take this part out. Hope you have taken it down. Okay. Suppose if rate of interest, let's say 12%, number of years, let's say 0.5, that is half year, let's say half year, 0.5 years. So if it is the case, how do we calculate, right? If it is continuously compounded, we require e to the power of Rn, it is e to the power of 0.12 multiplied by zero point 0.5, that is e to the power of 0.06 or 6, zero point 0.6, right? Or 0.06, 0.06. Okay, we require e to the power of 0.06. So one method in the exam they'll give you straightforward. Uh, if you want using this e value 2.7183, that method, then how do we have to calculate 2.7183? 2.7183 to the power of 0.06. Okay, now one question comes, how do we do this in regular calculator? 2.7183 to the power of 0.06. For that, we follow this method. Type in the calculator 2.7183, press the square roots. Okay, press square root 15 times. 15 times. That is fixed, okay? 15 times. Minus 1. Then you do into 0.06. This number, whatever is the power, into 0.06. Plus 1. Then into equals, like that 15 times. So everything remains same. Okay, just do it once more. 2.7183 to the power of to the power of 0.06 is what we require. So type the calculator 2.7183, press square root 15 times, then you do minus 1 into 0.06, whatever is the whatever is the power. You can even use this method to calculate like fifth root, fourth root, seventh root, cube root, like that also you can use. Plus 1, then into equals, like that 15 times. Don't just press equals equals, into equals, into equals. Some calculator, when you do into equals, number may not change. In that case, you change the calculator. Okay, hope it is done. How much you are getting? Approximately. Why it's going suddenly? Hope you have taken down the methods. Okay. How much you get? 1.0617, is it? 1.061817, is it 1.0618? I think. Rounding it off, is it correct? 1.0618. 1.0618. Okay. This is one method I told you. One more method that also I'll tell you. So e power x, if you write, it will be 1 plus x plus x to the power of 2 by 2, x to the power of 3 by 6. You can do x to the power of 4 by 24 if you want. So x to the e to the power of 0.06 will be 1 as it is, 0.06, then 0.06 square by 2, 0.06 cube by 6. Use the calculator. This is 1.06. You can do 0.06 into 0.06 divided by 2 equal to m plus. You can use that function, or again you can calculate 0.06 into 0.06 divided by 2, 0.0018, and 0.06 into 0.06 into 0.06 divided by 6, 0.000, 000036. So if I add 1.0618, I'm getting the number 1.0618. And one approximate number I'll tell you how to do, you can do things quickly. Ultimately, what I told you, rate of interest is 12%. Okay, let's rewrite once more. So e power 0.06 is what is there. I'll just rewrite once more. It's 1 plus 0.06 plus 0.06 square by 2 plus 0.06 cube by 6. Hope you're getting 1.0618 approximately. And how to do it quickly? I told you 12% and for half year, right? 12% half year. So approximately if you calculate for 12%, half year means 6% you get. 12% for half year means, so that is 1.0618, right? 1 plus r I told you. So this should ultimately represent 1 plus r. Approximately, not accurately. Approximate verification. Your answer should be 1.06, 1 plus 0.06. I hope you got the material. I hope you got the concept approximately. Okay. One small concept we'll discuss before we conclude. One small concept. You know the meaning of average. You would have done a lot of calculations by average, but try to understand. Average simple formula is x bar is what we write. Summation x divided by n. Like if you have 4 subjects, marks, how do we calculate average marks? Add all 4 subjects divided by n, number of subjects. Simple average, you know. Then we have weighted average, where we are going to do summation xw divided by summation w, where we multiplied by the weights. For example, or we say frequency also, f also sometimes we say it. Suppose you're thinking, uh, Let's say you think of a bakery. How many buns to be produced every day? Okay, so one day you produced 30 buns, another day you produced 50 buns, next day 30 buns, another day let's say 30 buns, another day 50 buns. Yeah, 50 buns. Now one method is there, 30 plus 50 plus 30 plus 30 plus 50 divide by 5, right? 1, 2, 3, 4, 5. Yeah, divide by 5. That is simple average. What is weighted average now? Instead of adding one by one, I'll say 30 is repeated how many times? 1, 2, 3. 3 times. 50 is repeated how many times? 50. 1, 2. Right? This is called as weights. This is X value. So 30 repeated 3 times means total how many? 30 into 3, 90, right? XW. It's called as weighted average. X into W divided by summation W. Same number only, but expression different. Another one is called as with probability. Probability proportion. Same average is given by summation X into P. Divide by summation P not required because total probability is 1. In other words, now 3 plus 2, 5. Express in proportion 3 out of 5. That is 0.6. 2 out of 5, that is 0.4. So 60% of the times I produce 30 buns, 40% of the times I produce 50 buns. So how do I calculate average? X value 30 into its probability, fifth value into its probability. That's called as expected value. Some people call it as E of X, expected value of X. So depending on whether raw data available or weights available or the probability available, we have to get the answer. But don't worry, ultimately our final answer will remain same. But when you do the problems later, you'll be able to understand. Hope you got the basics. Nothing to write down. Just want to tell you X bar, summation X by N, or if it weights are given, weight average, or probability is given, X value multiplied by probability. You'll be using in the problems, you'll understand better. Okay, this one small concept I would like to tell you. You would know it, but still, income statement. You have sales minus variable cost, contribution. I hope you know these things. Minus fixed cost will give you EBIT. But I'll go one step further. I'll call EBITDA. What the? EBITDA. Earnings before interest, tax, and depreciation, amortization. Before depreciation. You subtract depreciation, you get EBIT. You subtract interest, you get earnings before tax, profit before tax, taxable income. You subtract tax, you get profit after tax. Subtract PSD, preferential dividend, then you get earnings available to equity shareholders, EA to ESH, earnings available to equity shareholders. Divide by number of shares, you get EPS. One important ratio you need to learn, that is P ratio. Formula MPS by EPS. Let me tell you what is P ratio quickly. P ratio means how many times of earnings you are ready to pay. For example, if P ratio is 8, means if company makes 1 rupee, if P ratio is 8 means 1 rupee earnings, value will be 8 rupees. So, using P ratio, we can estimate what could be the market price. Higher P ratio means company is costly, high priced, we can say high confidence. Now people are telling Nifty market valuations have increased, the stock market has grown too high, stock market has to fall now. Why? Because P ratio is too high. P ratio too high means costly, it has to come down. In various parameters it is used. It is simple comparison between rental income and value of property. Like value of property is let's say 100 crores, and if I get rental income of let's say 5 crores. So what is the ratio now? For 5 crores income, 100 crores value, 1 is to 20, or that's what, 20 times. 20 times of earnings is my value. So P ratio is 20 times. So if I know what I can estimate the future earnings of the company multiplied by P ratio, I get estimated market price. P ratio is a very important one. We'll be using a lot. I just want to give you an idea. And one more word, market capitalization, nothing but market value of company, number of shares of company multiplied by market price per share. Market value called as market capitalization. You can also do estimated earnings of the company multiplied by P ratio. And one more term, free float market cap. Free float means the market value of shares held by non-promoters, held by public. Free float, available for trading purpose. Promoters don't trade. Like Mukesh Ambani don't sit and trade his Reliance shares. He do business. So exclude the promoter share. The balance market value is called as free float. So market cap is market cap into 1 minus promoters holding, public holding. That's called as free float market cap. Aware of these terminologies. And capital employed, you would know it sometime when you use the word capital employed. It is debt plus equity. And equity means what? Not equity capital, share capital plus reserves and surplus. So when I start a business, I take a loan, I put my own money. Put together, it's called as capital employed. So debt, like long-term loan debentures, equity, share capital plus reserves and surplus, also called as net worth equity. So just be aware of this income statement. You can take a quick screenshot of this and you can copy it down later. So today we just did the basics. Some basic problems are there in the material, answer hints are there, you try it out. I hope you are clear. Any doubts? Okay. So not getting any doubts. This is about the basics. Please do revise. We'll stop at this point for today. Tomorrow onwards, remember, we will be meeting at 6:15. So let's stop at this point. We'll see you tomorrow at 6:15 a.m. Till then, take care. Have a nice day. Bye bye.